Good afternoon. George Cavaligos for Naked Trader. More weak economic data again this morning. With the focus on the employment situation coming tomorrow morning, we were quite surprised this morning with the jobless claims data showing a big increase, back all the way up to 474,000 new jobless claims in a week. That's not good numbers. Pushed stocks down. Really pushed commodities down hard. Gold down more than $50, silver down $5, crude oil down $10. I think I looked at the grains were all down anywhere from 10 to 35 cents. Meats were down, basically all the commodities. U.S. dollar very well bid. A lot of the risk off trades going. Bonds up a point right now. They were pretty quiet all day, actually. Most of the day, the bonds were only up about half a point, and the notes were up about 10, 11 ticks. And then as the pits were closing, we caught another big wave of stock selling and commodity selling, and then the bonds popped. It seems like we're getting more and more of these big moves in the credit markets during the illiquid, non-floor traded hours, overnight, early morning, late afternoon. It's kind of frustrating for a floor guy like myself, but you can't fight that. It seems like a lot of the factors that are driving these markets aren't U.S.-centric at the moment. Tomorrow's the non-farm number. I think the markets are looking for like a 170 to 180 number, but in the back of everybody's mind, I think we're prepared for a weaker than 170 number. I think people are almost afraid we're going to see a sub 150 number. Market might pop a little bit on that. We're bumping up against some little resistance areas here on the 10-year. This 122.10 area is kind of a key area, old trend line. I don't know, those things haven't been working great. Tried to scalp it a little bit on the short side this morning when it made new highs the first time. You might have been able to snatch about 4 or 5 ticks on the short side, but it never really gave you the quarter point and half point sell-offs that we've been seeing. Obviously, with the non-farm data coming tomorrow morning, the markets are stealing themselves at the moment here. Tomorrow's numbers will tell all, guys. We'll have to see how that reaction goes. Remember the whipsaw trades on the non-farm data, where if it's a weaker number, we'll see a rally, but then I think you'll see some profit taking. I think if it's 125 to 175, the markets will rally a little bit, and then I think you'll see some profit taking. It'll come off. I think below 125 we'll see a rally and it won't come off because that's too weak. When you use those numbers above 180, obviously the markets are caught a little long, and we could see a little bit of a sell-off. Over 200 obviously is the backbreaker on the downside. So use those numbers in your mind, adjust your stops and your trade parameters accordingly. Going into the number flat myself, had some put spreads on, got out of that stuff, and am happy to be flat right now with all the wealth destruction that's going on around the world right now. So be careful. We'll see you tomorrow morning bright and early.